Costco is one of the best performing brick-and-mortar businesses in the world. In fact, you could argue it is the best performing brick-and-mortar business in the world. The way Costco gets customers to come back and spend more and more money and buy in bulk really shows the business customer value proposition. In fact, members renew their memberships at close to 90% renewal rates. That's among the highest of any business worldwide. But what's a fair price to pay for Costco stock? That's what I'm going to try and address in this video by conducting a discounted cash flow valuation on Costco's business. Let's take a look at the value.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in order to make this price estimate for where I feel is a fair price to buy Costco stock, I need several inputs, and I'm going to share with you where I'm getting the numbers and what numbers I'm using. So I need the market cap, which is a $407 billion market cap, the cash and equivalents balance at $11 billion, and the total long-term debt at $5.7 billion. I also need the number of shares outstanding, which is 445 million. I'm also going to utilize the Wall Street analyst estimates for the company's free cash flow growth over the next 6 years. So starting with 2024, the company generated $6.63 billion in free cash flow. That's expected to increase to $7.14 billion in its fiscal year, which ends August 31st, 2025, and then increase to $8.13 billion in 2026, before rising to $9.7 billion in 2027, $10.86 billion in 2028, and $13.6 billion in 2029. Needless to say, the Wall Street analyst estimates that are following Costco stock, they are bullish on this company's prospects over the next several years. And this growth in free cash flow is going to come from two sources. Number one, Costco is going to generate more sales per customer in the existing locations it already has. And number two, Costco is going to open new locations worldwide. Primarily, the analysts on Wall Street are excited about the potential for Costco in China. It's starting really small and really slowly, but it's gotten approval to operate in that market. And if it continues, the potential is massive for the number of locations Costco can operate in China. It's still operating. The number of locations in China is still below 24, and so it can grow to a much larger scale because of the population size and the geography of that country. Still, it is and will be challenging. These growth prospects are not guaranteed. They are just estimates for what the analysts on Wall Street expect from this company over the next several years. I also need the company's beta, which as of this recording stands at 0.79. A beta of less than 1 means that a company's stock price is less risky than the average stock in the S&P 500. So you should experience less price fluctuation with Costco stock than you would, for example, for a stock like Tesla or an Nvidia. That's a beta of much higher than 1, and so the price will fluctuate at a higher rate than Costco stock will. And the fluctuation in stock price is connected to the business. Costco's business is going to perform relatively well even if the economy goes into recession. In fact, you could argue that Costco's business might perform equally during a recession because people will be looking to save money, and Costco offers one of the primary things that Costco offers customers is a good customer value proposition. When you're buying things at Costco in bulk, you're paying a lower price per unit of whatever it is that you're buying, whether it be laundry detergent, soda, cereal, whatever the case might be. You're paying a lower price per unit on average than anywhere else when you're buying these products. You could argue you could get lower prices at Walmart for certain things, but at the same time, the quality of those items, comparatively to Costco, the quality is also better at Costco compared to Walmart. So customers are getting good quality products at low prices. And if there is a recession, maybe more customers will look to Costco to help save money, to help extend the reach of what each dollar buys them. All right, so now that we have all of the inputs we need, we can jump into the calculation for Costco stock. Let me draw your attention here to the 2024 free cash flow at 6.63 billion and forecast to rise to 13.6 billion according to Wall Street. Between 2030 and 2034, I utilized my own free cash flow growth rate, and I forecasted the company's free cash flow will grow at 7.75% in that transition period between 2030 and 2034. From 2035, I have the company's free cash flow growing at the long-term growth rate of 5%. I choose 5% typically when a company, I expect it to grow at the nominal rate of GDP of the countries it operates in. So that's why I chose 5% for Costco. So these are free cash flows expected in the future. But money in the future is worth less to us today, so we need to discount them. We need to get the present value of all of those future cash flows. And to do that, we need the weighted average cost of capital, which I calculated to be 9.1%. I used the cost of debt of 7.5% and a cost of equity at 9.2%, utilizing the capital asset pricing model with the beta of 0.8 and a risk-free rate of 4.5% and a market risk premium of 6%. So when I brought those cash flows back to today, I got the present value of operations at 294 billion. To that total, I need to add the cash and subtract the debt, which brings me to a value of equity at 299 billion. Then I need to divide that by the number of shares outstanding to get the price per share, which brings me to my intrinsic value per share calculation, which is the price that I think Costco stock is worth today. This is the price that I would want to buy Costco stock at today, which is $672.92. Well, I'm not going to be able to buy it at that price because the current market price is $916. And I've been following Costco stock for several years. I've had it on my watch list for several years, and it's never come down to a valuation where I feel I can buy. I've always felt that it's a great business. It's got great customer loyalty, a great competitive advantage. However, I've always felt that it's been overvalued. And this calculation suggests that according to my discounted cash flow model, the stock price is overvalued compared to the intrinsic value per share. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.